All right. Oh, I forgot to take off my headphones. Dang it, haircut. Nah, that don't matter. It's not what this live is about. All right, so boom. So boom. Let's get this started, honestly, because let me just promote. We live right now. Live right now. We's live right now. Oop. Don't want to get the moment time. Hi, so boom. And live right now. Boom. Posting it. All right, so let's get to it. Let's get to it. I'm gonna share my screen right now, just so entire screen. Bam. All right, cool. So now we can get started. We can get started. All right, so for those of you that don't know, trading is a lot harder than it looks. But in order to get started on trading, you need money, right? Because obviously you need money to make money. But uh, the benefit of prop firm accounts, they prop you up. That's why they're called prop firms. They prop you up. They give you the capital necessary to be able to trade in these markets. Because obviously, if you go into trading and you're like, "Oh, I want to trade futures," well, if it isn't news to you already, trading futures is extremely expensive. One mini contract, right, for the Nasdaq is around $24,000, 25,500 and some change at the moment. So if you don't have 25,000, then you won't be able to afford not even one contract, and that's even if you go down to micros. So you have mini contracts and then you have micro contracts. So the micro contracts are like 10 of the mini contracts, but even then you need about 2,500 to start if you're going to use your own money. I would imagine that a lot of people that get started in trading are starting in trading to make money. They don't necessarily have money to trade with. So you need prop firms, firms that prop you up to give you the capital necessary for you to be able to trade. That being said, I haven't introduced myself. My name is Robert, Rob for short. I'm a funded trader and I have $100,000 in trading capital. I'm not here to sell you anything. I'm here to state the facts and tell the truth. So if let's just move forward. Trading costs money and time, right? So you need money to trade and you need a time horizon in order for you to get the money for the trading that you're doing, because obviously you're going to have to put in time and effort to trade and it's going to cost you money to start. To get started, you need around $200 to $300, right? And you need a clear goal as to what it is you're trading for. You need your why, right? It can't simply be just money. It's not going to get you far. You need a significant motivator to motivate you when you're losing money still, because you're going to lose money in trading. Everywhere and anything, any endeavor, any employment, it doesn't matter. You'll take losses. You'll take losses wherever you go. It doesn't matter what you do for a living. It doesn't matter where you are. It doesn't matter if you're a boss, an employee, you're going to take losses, right? So you need a clear goal so that it pushes you and motivates you even when you're taking losses, because you're going to get them. You need a leveled head, right? You need to be clear-minded. And that's what makes trading difficult. You need to be able to just like, you need to take your wins the same way you take your losses. You need to take your losses the same way you take your wins. A very leveled state of mind. You can't let yourself get wrapped up in the emotions of like, oh my God, I made this much money today, or damn, I lost this much money today. If you do that, you're going to be on an emotional roller coaster and you'll be exhausted very fast. All right. So third, you need you need faith in God, right? You need faith in the Christ, and you need faith in your ability to perform. You need to go into every trade believing that you've already hit TP. Right? You need to be able to go into every trade assuming that you've already made the money you're setting out to make. But to round it back, to circle back, you need $200 to $300 to start. 200 specifically to start, right? If you want to do it the route I did, then you'll need $300, and I'll explain why moving forward. So getting funded, right? Like I said earlier, I'm funded with $100,000 of trading capital. Not here to sell you anything. Just trying to state the facts and tell the truth. And to get funding, right, you need a first pick between two prop firms, because these are the two that I've used. I don't know about Apex. I don't know about Forex trading. I don't know about any other prop firm account. These are the two that I'm familiar with. Therefore, these are the two that I'm going to showcase to you. So to get started, you have Top Step or you have Take Profit Trader. With Top Step, it's a 90-10 split, meaning you take 90%, they take 10%. So when you make money and you take money out for yourself, that's called a payout. When you get a payout or take a payout, you're going to need to give them 10% after, hear me well, they start taking their 10% after the first $10,000 that you've taken out. So if you take out 1,000 here, 2,000 there, 4,000 here, 600 there, when you hit that 10,000 that you've taken out, after that, they're going to start taking their 10% split. So if you take $1,000 out, they're going to take $100. If you take $10,000 out, they're going to take $1,000, right? And it's only fair. It's more than fair, really. It's like you're taking 90% of all the money you make. Come on now. They need to eat too. They're already eating off of the dickheads that have to retake the evaluation. They're paying that reactivation fee, reset fees. They're eating off of that, but they want to eat off of your trades too. So they're going to take 10%. Now the cost is a $200 total for the funding, because you need to start the evaluation, which is $50. And when I say evaluation, when you're getting funded, the act of getting funded means that they have to first verify your ability to make money. That's the evaluation stage. You have to make $3,000, and you have a 2-day minimum for passing that. So you can only make 50% per day, meaning you can only make 1,500 on day one, 1,500 on day two. That's your ceiling, 1,500 per day. And if you do that in 2 days, cool, you get funded in 2 days. Who gives a fuck? But if you're like the majority of other people, that you take, a couple extra days to get funded, which is there's nothing wrong with that. You just pay the $50 after you make $3,000, right? In your evaluation stage. When you make the $3,000, boom, now you can earn funding. You earn funding by paying a $150 activation fee with TopStep. So in total, it's $250 to start the evaluation, and then $150 to then get funded and get your account, right? In the midst of all of that, when you start your evaluation, and even then when you go into your funding, your funded account, you have a $2,000 drawdown, meaning that when you start your evaluation, you can only lose up to $2,000. That is your floor. So once you hit negative 2,000, right, you start at zero. When you hit negative 2,000, evaluation is over, right? You're going to have to do it again, pay another $50, do it again. When you earn your funded account, you have a $2,000 drawdown like you did in the evaluation. But after you make $2,000, your drawdown is at zero. So you can't let the account go back to zero, right? Or you lose the account. So ideally, you would want to set a buffer for yourself, and then, make more after that buffer. So for example, you would want to make 2,000, and then whatever you make after that 2,000, you can start thinking of like, oh, this is the money I can take out, right? So to even be able to take out money with TopStep, you need 5 winning days of $150 or more for the payout. So you need to make $150 or more 5 days. And that's like, you can have Monday, you get a good day. Tuesday, you get a good day. Wednesday, you take a loss, right? And then Thursday, Friday are other winning days. You have 4 winning days in total. Even though you traded 5 days, you have 4 winning days in total. So as soon as you have 5 winning days, it doesn't have to be consecutive, right? You can have 1 winning day, 3 losses, 3 losing days in a row, and then 4 or 5, and then 2, 3, 4, 5 or winning days, and you can get a payout. But basically, 5 winning days, $150 or more, you can get a payout with TopStep. Excuse me. I should have grabbed the water. Well, now with the second prop firm, it's called Take Profit Trader, right? And they have an 80-20 split. So it costs $100 total for funding, right? So they don't have an activation fee like TopStep does, but they have the same as TopStep, a $3,000 goal for your evaluation stage, and then you have to complete it in 5 days. Like, there is no like, oh, I got it done and I already made 3,000 and it's day 2. You gotta trade for another 3 more days. You could do $10, $20, $5, $100, and then boom, you get the idea. But they have a 5-day minimum for funding. So you have 5 days to make 3,000, right? If it takes you more than 5 days, That's okay. It's just that is the minimum. You can't do less than 5 days. So if you get the 3,000 before the 5 days, you're gonna have to bullshit for another however many days till you hit day 5, and then you get funded. No activation fee. So as soon as you pay the $100, you pass your evaluation stage, then they just transfer you over. Like they give you the credit for the activation, and they just transition you into an active account. So they also have a $2,000 drawdown. So obviously you can't lose more than $2,000, or else you'll have to redo the challenge. What I like about Take Profit Trader is that they have daily payouts. So you can earn money today and then take out money today. That's kind of the benefit of it. You know, if I had a grand slam and Lord and God permitted me to have like a 5K day, right? I could take that out today with Take Profit Trader. They have daily payouts. So that's why I like Take Profit Trader. Top Step is an amazing program, and it's faithful to its customers, right? But the whole 5 winning days in a row, like if you're a consistent, profitable trader, it won't necessarily mean much, right? Because you know you're gonna get to it. So as soon as you get that day 5, you just take your payout. And then when you get another 5 days, take another payout. But some people like to see their money every day. And that's okay. You know, personally, even with the ability to take out daily, I wouldn't. I would just take it out on a weekly basis. Just the eligibility to be able to take it out whenever I want is the benefit of Take Profit Trader. So I'll be able to just take it out on a weekly basis, and then you can leave Top Step for like monthly payouts, right? So, because the idea is if you have 2 accounts and you make $250 each, like a day, in actuality, because you have 2 accounts, Top Step and Take Profit Trader, in actuality, you made $500, right? Because you have the 2 accounts trading at the same time, which is why I said earlier, it can either cost you $200 with Top Step, or it can cost you $300 Top Step and Take Profit Trader. That's why it would cost $300. I would do that, right, personally, because now you have one that you're taking payouts on a monthly basis, and then you have one that you're taking out payouts on a weekly basis. That being said, the daily payouts with no friction, like you don't have to worry about stuff, is after $2,000 balance on Take Profit Trader. So once you pass and you know your evaluation stage, you get funded, you have your account, and then you make your money. If you were to try to take out money before the $2,000 balance, it's a lot of friction in between that, right? So they're gonna take 50%, right? It's not gonna be an 80-20 split. It's gonna be a 50-50 split, right? And on top of that, I forgot what the other thing is, but there's just like a whole bunch of friction that you don't get after $2,000. So take that how you will. I personally wouldn't like to just do the 50-50 split. I would just wait till I have $2,000 balance, because think clearly for a second. If you've already made $3,000, why can't you just do it again? Right? If you already made $3,000, who's to say you can't make another $3,000? And let's say you did it in a week. Who's to say next week you can't just make $3,000? Now, if you want to take it a step further, you wait for the week after, right? Cool. But you have an extra $1,000 that you could just be like, I'm gonna take out 500 right now, because why the fuck not? The week after that, you can take your daily payouts with no friction, 80-20 split. That's it, right? So don't get caught up on the specifics. Just do what is required, right? Do what is required and stay faithful in the process, in God and in yourself. And you'll get to that point where you have $2,000 balance and you can take out per day whatever you make that day. So just be patient with yourself and with what it is you're trying to do. Don't wake up tomorrow and think, oh, I want to make $1 million. It doesn't work like that. First, learn how to crawl, then learn how to walk, then learn how to run. Okay. Platforms you're going to need to download is TradingView. It's free. You can download it on your phone, iOS or Android, or you can download the desktop version on your laptop or computer. And TradingView, you would normally use it for Take Profit Trader if you were to go that route, right? But that's where you trade on. That's the platform that you were to trade on for Take Profit Trader. And you'll also need Tradeovate for Take Profit Trader because that's the broker that you'll be using for Take Profit Trader. So Take Profit Trader is the prop firm, Tradeovate is the broker, and then TradingView is the platform that you use to trade on, right? And when you're on TradingView and you're trying to sign in, it's going to prompt you with which broker do you use. It's going to say Tradeovate there. It's going to be one of the options. You choose Tradeovate, you sign in with the login information that Take Profit Trader gives you because they give you a username and a password. And you just sign in and you trade, right? You can trade on Take Profit Trader. You can trade on Tradeovate, but honestly, it's like the handheld, the app version of Tradeovate is not very beginner friendly. And the website, although it is cool, in my opinion, it also is not beginner friendly. So TradingView, very, very, very beginner friendly. So download TradingView, have your credentials from Take Profit Trader for Tradeovate, and then sign in on TradingView. It sounds convoluted, but I promise you it's very simple. Take Profit Trader, you make your stuff. They give you username and password. Tradeovate, you sign in, right? Activate the account by signing in. And then on TradingView, you just sign in the same way you signed in on Tradeovate, right? So it's pretty simple. For Top Step, you're gonna need to download Top Step X, right? And they are their own broker. They have their own broker, right? So Top Step has a platform, Top Step X, which is where you trade from. That's your broker. That's where you trade. The handheld version, they don't have an app. So you go to the website, and then from the website, if you're, from your phone, you just add it to home screen. And then it makes the app for you, sort of. So it adds it to your home screen. You click in, then it opens up, and then it's just there. Boom. You have it right there. You can download it on desktop, like they have their own desktop version of the platform. Actually, is it downloadable? I don't remember. I think it's the same like the phone, that you go to the website and then you just add it, like you pin it to your taskbar, and then you could just open it up from there. What is it that they downloaded? I don't remember. Just look up Top Step X download. If they don't have it, then it just means that you just do it on the website, because that's normally how it is. You launch Top Step X and then it opens up like in your browser. And Top Step X, for Top Step, it's vertically integrated, meaning that all of their stuff is in one place. You don't have to go that like Take Profit Trader. You don't have to download Tradeovate and then TradingView and then sign in here and then sign in there. It's none of that. Top Step is just all one thing, all one platform. You sign in, it's all in the same. I don't know what that's called. The word is evading me at the moment. It's its own ecosystem. There you go. And then, download School on your phone if you don't have it already, or go to the website on your laptop and join the MFR School community. It's free. It's my community. I put all of my information, like everything I do, how I go about everything. I'm basically taking you guys with me through the journey of learning everything in the stock market. So, things that are going on at the moment, I'm gonna keep you guys updated, teach you how to read income statements, balance sheets, cash flow statements, analyze performance, teach you how to, trade by sending my next trades. Like I'll just post it and I'll say, this is what I'm looking at. This is what I'm looking to do. When I mark my charts, I'll screenshot it and then send it there so you guys can copy it and then learn how to go about. So, eventually you'll know how to do it yourself, but it's basically like training wheels. The school community is basically training wheels for everybody that's trying to learn how to trade and invest. Basically, like I'm gonna do it all regardless. So I'm gonna just put everything I do on the school community so you guys can learn and grow with me. Because either way, I'm still going to look up these bank statements. I'm still going to look up these cash flow statements. I'm still going to look at these companies and analyze them. I'm still going to be trading. I'm still going to be marking up these charts. I'm still going to be taking these trades. But I'm going to be putting it all on the school community so that you guys learn along with me. As I do it, you can learn how I do it, why I do it, things of that nature. So this is what it looks like when you go to Take Profit Trader and you choose your account size. Because like I said earlier, I'm funded with 100,000 because I have two $50,000 accounts. So this is a one-time payment, right? So you pay your $100. It says 170, but you use the code no fee 40 and you get 40% off, making it $100 flat. And they have no activation fee, right, for Take Profit Trader. So you just pay that $100 once. If it takes you longer than a month to pass the evaluation stage, it'll work like a subscription. You'll be charged again to keep the evaluation open, right? So the idea is to pass it in a month so you don't have to make this renewing payment of however much. Right, so the 50,000 is $100 to start your evaluation, and then Take Profit Trader has no activation fee. Therefore, it's just $100 to get started and get funded. Right. Again, the code is no fee 40, all caps, and you get 40% off, making it $100 flat. And that renewal fee stays $100. But regardless, you wouldn't even want to get to that point where it's taking you longer than a month to pass, because honestly, it shouldn't take you more than a month to make $3,000. If it takes you more than a month to make $3,000 trading, then you're doing something wrong. I'm gonna keep it a buck. You're doing something wrong. If you can't make $3,000 a month, you gotta go back to the drawing board. So top step, on the other hand, is $50 to start your evaluation. And then at the bottom, you can see that it says all traders pay a one-time $149 activation fee per express funded account upon passing. It is the same for all account sizes, meaning that you can do the 50K, which is $49, and then it's $150 to activate the account to get your express funded account. You can do the 100K and it's $100, right? And then you're gonna have to pay once you pass evaluation to activate your funded account. You'll have to pay $150, or you can do the 150K and pay $150, and then when you pass the evaluation, you're gonna pay $150 activation fee. So pick your poison, choose the one you want. I personally think that the 50K is the most economically sound, right? It's the most popular for a reason. It's the cheapest to start. You only need to make 3,000, right? As opposed to the 100K, you need to make 6,000, and then the 150K, you need to make 9,000. It sounds like a lot. It sounds drastic, but the fact that you have more buying power for these, like when you make your positions and you trade, you can have more buying power, because I trade with one contract, right? When I go into a trade and I get into a position, I'm using one contract. I can use 5, but that's called over leveraging. Not going to do that. With the 100K, you can use 10 contracts, right? So if I'm using 1, that means for the 10K, What's the proper ratio? 1 to 5 would be 3 to 10. Yes. No. 2. I'd be using 2 contracts. And then I'd be using 3 contracts for the 150. Or 4. Doesn't matter. Doesn't matter. Point is, use the 50K. Forget the other 2 exist. They don't matter. The idea is to make more than what your job is currently paying you. Keep that in mind. I'll jump back to that later. But the idea is just to make more than your job pays you. If you can accomplish that, you're okay. You don't need all this extra stuff. You don't need to make a gajillion dollars tomorrow. Okay? You don't need that. Your brain isn't ready for that at all. Just being able to see a couple $100 on the screen, you're gonna be like, oh, I gotta get out. Imagine if it's a couple thousand that you're seeing on the screen. You're gonna go crazy. You won't know how to manage that. You're not. I speak from experience. You're not gonna know how to manage that. With the 50K, you're fine, right? You're good with that. You trade 1 contract, you make your 3,000, you pay your 150. Now you have your account. Do the same thing you did to pass the funding. Now you have another 3,000 in the account that you can take out, right? It's pretty simple. Don't complicate it. So now, get all that done first, right? Do all of that. Choose one or pick both and start. Because it makes absolutely no difference that you listen to all of this and then you do not do anything with any of the information that I give you. It'll be just a waste of your time, not a waste of mine, because I'm gonna use this for content either way. It'll be a waste of your time, and it'll just be for nothing if you don't do any of what I'm telling you to do. Open up your laptop or open up your phone, go to topstep.com, start with buying the $50 evaluation for the 50K, or go to Take Profit Trader, open up on your laptop or your phone, start with your 50K evaluation, so pay your $100 and get started. Just start, right? Just throw yourself off the cliff, just start. Because after you start, now you're just like, okay, now I can't even take it back. They're not going to give me a refund. So I'm just here. Either I just spent this $50 for nothing, or I'm actually going to give this a shot and see where it goes. Just start. What do you have to lose? Absolutely nothing, especially if you don't have anything to show for it now. So get all that done first, and then, after this live, it'll probably just be a video up on YouTube. Pause this, come back to it once you get it done, and then we can move forward from here. Because this will be the hardest thing you do probably ever. It isn't for the weak. If trading were so easy, then 80 to 90% of people would not fail when they try and go into this industry. 80 to 90% fail, right? For a variety of factors. But the fact is, it is hard. It is very hard. If you do it on your own and you're just getting started and you've never done this before, and you have no way of knowing right from wrong when trading, you're going to be on that road for a while before you figure it out, right? So that's why I'm here to just state the facts and tell the truth. It's not easy. You can get lucky, but luck happens when preparation meets opportunity, right? Be prepared, and when the opportunity presents itself, you will get lucky. You will get lucky on a very big scale. God is generous. He is very, 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 very generous. And God loves his children. Who wouldn't want to be generous to their children when those children are prepared and awaiting an opportunity to use the talents that he gave them? right? And it's hard primarily because, not necessarily because of trading itself. What makes it hard is the fact that trading puts you in front of yourself. You have to sit in front of a computer and manage yourself from doing anything so that you can lock in some profits. You have to recognize and acknowledge everything that goes on in your head, and you have to know how, you'll hear yourself talk. When you lose, you're gonna be your worst enemy, and when you win, you're gonna be your best friend. But that's why you need a leveled head, because you can't shit on yourself when you lose, or else you're gonna deteriorate the potential for the next trade. Right? You can't be hard on yourself because you'll deteriorate the potential for the next trade. You'll overthink, you'll second guess, you'll see yourself as not enough. You won't be able to think clearly and operate on what is required of you at the moment when you're taking your next trade. That's what makes it hard. The fact that you have to manage yourself. It isn't just 1, 2, 3, boom, 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 press the button, I'm out. I'm good. It is that simple. But it isn't psychologically or mentally. Because what happens when it starts not going your way? Are you going to panic sell? Or are you going to wait for it to hit TP? Wait for it to hit your stop loss. You got to be able to. What makes it hard is the managing of oneself. That is what makes this hard. The managing of oneself. That's why discipline is it's an essential requirement for trading, because you have to manage yourself. You have to manage your emotions. You have to manage your mental state. You have to manage you. And if you don't know yourself already, good luck. So these are rules. I'm going to get into the strategy as to what it is that I do. Just these are important too. I will teach you exactly what it is when I'm on the charts. I'm going to show you my chart. I'm going to show you how I mark it up. I'm going to show you what it is I look for when I'm going into these trades. But this is just as important. Rules. Rules. You need rules. Without rules, you're nothing. When you have a job, your job gives you rules. They say, this is what you do. This is what you cannot do. This is where you go. This is where you cannot go. This is how long you have to be here. This is how long you cannot be here. This is when you leave. This is when you go. Everything has rules. Every job has rules. Every business has rules. This is no exception. So 1 to 2 trades per day. You'll see people have 26 trades in a day, and they'd have made $600. The math isn't mathing. 26 trades and you make $600. That means that you were down and you were just trading your way back up to break even. Right? 1 to 2 trades. Let's say you have a quarter, right? 50-50, and you flip that quarter. Every time it lands in heads, you make 100. Every time it lands on tails, you lose 25. Every time it'll have to land on, like, let's say you hit it, lands on heads, you make $100, you're happy. It would have to take you flipping that coin and it landing on tails 4 times in a row for you to lose that $100. I'm gonna say that one more time because I don't think that's sinking in real quick. You have a quarter. Heads, you make $100. Tails, you lose $25. If you flip that quarter and it lands on heads and you make $100, for you to lose that $100, you would need to land 4 times in a row tails, losing $25 each time for you to lose that 100. What are the odds of that? It's low, right? Because it's a 50-50 chance. So you flip that coin, lands on heads, you make $100. You flip it again, lands on tails, you lose 25. Now you're at $75 profit. You flip that quarter again, lands on heads. Now you made another $100. You're up $175. You flip it again. Now it's on tails. You lost another 25. You see where I'm going with this? You're still up. If you flip it again and you land on heads, now you're up two and change. You lost twice, but you're up 2 and change. Why? That's called risk management, right? 1 to 2 trades per day. If you lose once, you have another opportunity to make it up again. If that doesn't work out, you go on to the next day. Don't stress it. Do not stress it. The likelihood of you losing after 2 losses in a row are very high because now your mental state isn't, oh, I'm just going to trade well today. No. Now your mental state is, I got to make that money back. So I'm going to just take whatever the fuck shows up so that I can make that money back. I don't even care about being in profit anymore. I just don't like the fact that I lost. That right there is what's going to be the determining factor as to whether or not you're profitable or unprofitable. That right there, that singular thing that I just said will determine whether or not you're profitable or unprofitable. Now, you either have to stay up from 12 a.m. to 4 a.m., right? Or wake up early from 9 a.m. to 11 a.m. Why? Because the market has sessions. It has times of day where the market is operating at the most volume, right? Where price is moving fast enough for you to make a profit without having to be in front of that computer for 4 hours. That time frame is 12 to 4 in the morning or 9 to 11. And the next slide is the sessions. So I'm going to break that down. So just stay with me. Rule number 3 is don't practice greed, right? What I said for rule number 1, you not practicing greed is taking your 1 or 2 trades that day and you're moving forward with your day. Even if you only made $200 or $300 or $400, right? You do not practice greed by being gracious and thankful for every time the Lord blesses you with profits. You take it for what it is and you move on with your day. Tomorrow's the next day. Maybe he'll like the fact that you did that and you were gracious and grateful, and he'll bless you tomorrow with an amazing day. That's happened. There was a time spread in 2 days, right, where the first of those 2 days, I made $600. I was very grateful. Very grateful. Super, super grateful. $600. I said, I'm okay with that. I'm good. I'm done. I'm not going to trade anymore. It is what it is. I don't feel like practicing greed. I'm going to just take this. I thank my Lord. The next day comes around, blesses me with a $2,000 day. I don't take stuff like that very lightly. I think that's intentional. Do not practice greed and you will see the results. Because not every opportunity is a $1,000 banger, a $500 banger, a $1,500 or $2,000 banger. Not every opportunity is like that. Some opportunities are just going to be $250, $300, $500, $700. And that's okay. Because you're still making more than the minimum wage. If you get paid $20 an hour and you work 8 hours, then you make $160 a day. After tax, you're closer to $90 to $100 for the 8 hours that you put in. Mind you, you're upset the fact that you only made $300 in 15 minutes to an hour. You're mad that you made $300 in 15 minutes to an hour, but you're okay with working an entire day, 8 hours for what you take, $90 to $100. Make that make sense to me, honestly, because it doesn't. Doesn't make sense to me. Be gracious. Be grateful. Don't practice greed. Next rule is set your alarms. With TradingView, you have the ability of setting alarms. So even when you're with TradingView, you'll be able to set your alarms because you have the feature to do so, right? You on your chart, you can set a price, set an alarm for that price. When price action hits that price, right? When the candle touches that price that you set the alarm at, you'll get an alarm, right? Obviously, we have levels to where we want price to touch. I'll break that down more when I go in and I show you the strategy. But each level, you want to mark it with an alarm. So like that, you don't have to be in front like this, just waiting and waiting and waiting, looking. You set your alarm, put the phone down, you do whatever it is that you were gonna do. You go out, watch a movie, make dinner, do laundry, doesn't matter. You have your alarms. As soon as you hear that alarm go off, you're like, oh, okay, cool. Price is doing exactly what I wanted it to do. Now let me pay attention to the market. Anytime before your levels are touched is just white noise. It's not important to you. It doesn't matter. Whatever price does, if it doesn't touch those levels that you set for it to touch, then you have no business in the market. You're literally just in front of the market looking for trouble. And I'm guilty of that. But in my defense, I like looking at the charts. I like studying it. I like sitting here and just for hours, just looking at that candlestick, seeing what it does. And I'm just like, ooh, you're almost at the level. Oh, it hit the level. The alarm will go off, and I'm looking at the chart. And I'll just be like, oh, in there. Ready. It's go time. It's showtime. Right? So set your alarms so that you don't need to be like me. You could just go walk away, have a life, do what you got to do. And then, you trade whenever the alarms go off. That's it. Now, stay disciplined to the strategy, the one I'm about to show you. And the rules, these rules. Just stay disciplined by only trading the strategy. Don't look for the newest shiny object. Stop doing that. Okay? You hear all this mumbo jumbo, like all this bullshit, basically. You hear all this bullshit about like other traders talking about orb and fair value gaps and this, that, and the third and whatnot. None of that matters. None of them. It's all fictitious. It's basically just their format of looking at the market. It's their way of setting their own understanding of what they're looking at, right? It's their own perception of the market, right? It's how like every religion, it's its own perception of God, right? There's different ones for a reason, but there's a particular one that's like, no, this is it, right? You got Jesus Christ, and you got everybody else, right? You got the strategy, and then you got everybody else. You got your fair value gaps, your orbs, I don't even know what the other ones are. Like, I don't even know. Doesn't matter. Now we're back to sessions. Because remember before, either stay up late, 12 a.m. to 4 a.m., or wake up early, 9 a.m. to 11 a.m. These are your sessions. So main futures, trading sessions, U.S. Central Time, adjust for your zone. But here you have your Asian session, European session, and U.S. session. So Asian session starts like I think this might be wrong. No, that's right. Yeah, it's right. It's just off by an hour. Asian sessions is 6 to 3. European sessions, 6 p.m. to 3 a.m. European sessions is 3 a.m. to 11 a.m. And then your U.S. sessions is 9:30 to 4 p.m. Right? So the reason I said 12 to 4 is because for Asia session, the most active times are from 12 to 3 a.m. And for London, the most active times is the opening, so 3 to 4. You want to capture that volume in that time frame. So you can either stay up for Asian European session. Is basically what I'm getting at. You can stay up for Asian and European session, or you can just wake up for US session. The majority of traders just wake up for US session. But there are strong movements. Like you can make a lot of money trading Asian and European sessions, just as much as you can trading US sessions. But you got to be a little bit more picky with the Asian and European. Just a little bit more picky. US session, as soon as 9:30 hits, you got your run. Like it'll just pop either in any direction. It'll just wake up. Like the market will just, and you got money pouring in, right? So you got to pick your battle. Either you want to battle at night or you want to battle in the morning. You want to go to sleep early and wake up early, or you want to go to sleep late and wake up late. Which one do you want? You got to pick. I personally, I'll be different. I'll be up for both sessions. Like I'll go to sleep around 2 o'clock in the morning, 3 o'clock in the morning. I'm just looking at it. If there's a trade there, I'm in it. If there isn't, I'm not. And then the US session, if there's a trade there, I'm in it. And if there isn't, I'm not, right? And some days, if I get a good win on Asian and European session, I won't even wake up for the US session. I already made my money for the day, right? I don't need that. I don't need the extra. I don't need to practice greed, right? I'm good with just, if I made money at night, like let's say I made, if God permitted me $700 or $1,000 at night, what business do I have trading in the morning? Right? I'm like, who, for what? Right? Like, even if I only make $600 at night for European and Asian session, I'm gonna sleep in. I'm gonna take that 600 to the bank. Like, I'm good. 600 in a day, buddy. 600 in a day, that's a doctor's salary, bro. That's a doctor's salary, bro. You got to pay attention. Like, you making 600, you're clearing 100,000. If you're making 600, you're almost at $200,000 a year, bro. $200,000 a year. And you mad at $600 in a day? The fuck out my face with that. Come on now. What the fuck is wrong with you? What the fuck is wrong with you? I get it. You want to make thousands of dollars a day, but let's be real. You're not there yet. You're not there yet. You're not there yet. Strap up your boots and be happy with what you get. All right. You don't need that. You don't need to practice greed like that. You're not him. You'll be him in the near future if you lock in and keep your head down, but you starting out. Be happy with the little that you make as long as it's more than your job. Even if let's say you do have a job and you're $20 an hour making $160 a day. If you make $200 in the morning, you're winning. You're winning. You made more than your job in a fraction of the time. If that's not winning, I don't know what is. If that isn't winning, I don't know what is. And if you're doing it with both the accounts, let's say you locked in and you got both Take Profit and Top Step, your 200 is actually 400, buddy. You mad at 400? You made that in a fraction of the time that it takes you to make 160? Okay. On to the strategy. Because y'all be bugging. This is what let me just make sure I'm still recording real quick. Matter of fact. Okay. I'm an hour deep. 54 minutes. Wow. So to show y'all, this is what Top Step looks like on the computer. On the phone, you're only going to see the chart or your order log, which is this right here. This is your order log. And then this is your chart, right? This is what marking up your chart looks like, right? And just to show y'all that I'm I'm not talking shit. I'm not talking out of my ass. Like, I'm really like, come on now, bro. I'm not talking foolishness. And what I said about the whole 50% win rate, if you make more for every time you win than you do when you lose, it doesn't matter what your win rate is as long as you're making money. Right? Like, I'm trying to tell you, I have nothing to sell you. Absolutely nothing. All I want to do is just trade well. And I'm going to keep my studies up, because your boy want to make that bread. Your boy got a family to support. So you don't need, these at the bottom are called indicators. You don't really need these for the strategy. I started trading with these, and it's like my sprinkle onto the strategy, so to say. Like, these don't matter. If you want to know what they are, this is the MACD, the moving average convergence divergence indicator. This is the RSI, the relative strength index, and this is your ATR, the average true range indicator. So take your smartphone, and do smart things and look up what each of those mean, because this live isn't for that. So here, this is the chart. Normally, this would be red and green, but I changed the colors because it helps with my psychology. Like, colors, no matter how much you want to deny it, colors play a part in how you perceive things, right? It's why McDonald's is red. Red induces like an attraction, right? That's why, like, in the Matrix, it's like the girl in the red dress, she catches your attention like that. Red is a very powerful color. So when you see red on your screen, your heart can sink to your ass, even if it's a few couple dollars. Like, it'll just invoke a very strong emotion. We don't need that. So for the red candles, I made them gray. For the green candles, I made them orange. So it's my own personal little taste. I would recommend you guys copy this. Like, make the red candles gray, and then make the green candles whatever color you want it to be. But these lines that you see, like the squiggly ones, this is called your Bollinger Bands, right? And then the orange line here is your 20-day moving average. So where price has been on average for the last 20 days, right? And then this is your 50-day moving average. On average, what price has been in the last 50 days. So if I were to take these off, like, I go here, hide it, right? And then you would just have which is, for the sake of this video, item, just so you guys don't get confused, right? So here, this is a great place to start with the strategy. This was the week before last week. Trump tweeted that him and China were at odds, and he was going to put 100% tariff on them, this, that, and the third, and the market sank like a rock, right? Market sank like a rock. Then the weekend passes, Monday it opens, they're up again. And the reason why this is important is, in order for you to understand what it is you're doing on trading, it's called, the strategy is called ICC, indication, correction, continuation. That's all it is. Indication, correction, continuation. Where's my book? So it's not complicated, right? It's not complicated at all. And I'm not the founder of this strategy. I'm not going to take credit for something I didn't do, but I do study it a lot, right? I study it a lot. Why? Because it works. Therefore, the inventor of this strategy, his name is Trades by Sai. There'll be times on the school community where I'll just, I'll have a random hangout, and it'll be like a study session where I just, like, I'll look at the video and I'll be studying and I'll be talking over it, and I'll just be like, I'll break down his breakdown, so to say, right? So basically, an indication and a correction and a continuation is the entire strategy. That's all it is. That's why you don't need the extra indicators. You don't really need any of that. But the idea, let me go here to let me go down here. So strategy, if I can break it down real quick. We're already an hour in. I didn't think this would take this long, but here we are. So we are going to get started like this. So you have price, right? Price would start here and then it would rise here and then bounce back down here. And then it'll go back here and then back down here. And it'll just do this, right? The candles will just do this for a while, right? And then it'll break out like that. Bop. It'll break out like that, right? When price makes this, when price does this, this is called consolidating, right? It's just, it makes, it'll have, oh, it was a little bit, there you go. Right? So when price is here, it'll just do this for a while. It'll just trade in a zone. Like an example of that would be up here, right? It just traded in a zone. It's just not going up or down. Where's another example of that? Because we're in 1 hour, so we're going to jump to the 15-minute. So it looks like this, right? It's just trading like this, not up or down, right? Right? Like this right here, not up or down. Right here, not up or down. Or here, not up or down. It's just in one zone, in a straight line. It's just, it doesn't know what it wants to do. Or like right here, it's just beep, 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 beep. Same. It's just, you could box it out basically, but that's a consolidation. Right? So let me type this out. See you guys. This is consolidation. All right. Hello. Hello. ¿Está bien? Right. So you have your consolidation right here. This is what consolidating means. That price gets here and then it just bounces around. It doesn't go up or down. It just stays there. When it breaks that, so these levels right here, right? Like the peak here and then the peak here. This is your swing high and your swing low. So let's type that out. This is your swing high. Right? And then you'll have your swing low at the bottom. So you have your swing high and your swing low in your consolidation phase. So in indication, remember ICC, indication, correction, continuation. An indication is when price breaks a swing high or if it breaks a swing low. So price can either do this and that'll be your indication. It just broke these levels here and it broke that. That's your indication. Now you know where price wants to go, right? It's indicating its direction. That's why it's called indication. It's indicating its direction. Or it could have done this, and then this would have been an indication, right? It broke these swing lows and it broke below. That's an indication, right? It's indicating the movement as to where it wants to go. So we're going to go back here. This is your indication. A correction comes when price comes from up here, right? And then it corrects, right? So it goes here, it eats all of this, all of these people, right? So basically in an indication, I'll explain in a minute, but this is your correction. So you have your indication, it broke the swing highs, then it corrects, and then it has its continuation. Because that looks ugly. We're gonna do that again. All right, so you have your indication, your correction, and then your continuation. So you have your indication. Let me type it out right here. You have your indication, right? It broke your swing highs, indicating price is going to go higher, because what price wants to do, price has a trend, right? You'll hear this a lot in the market. There's market trends, right? The trend as to where it's going, right? What we're trading here is market structure. So when it's in a trend, there's a certain structure that the market has that it's basically saying like, yeah, we're going to continue to go up because this is the trend, right? So the trends look like this. You have a higher high, like it makes a high, right? And then it has a higher low. And then it makes a higher high, and then it makes a higher low. And then it makes a higher high, and then it makes a higher low. And then it makes a higher high, and then it makes a higher low, and then it just continues, right? Let me fix that. Oh, it's a little ugly. There you go. But that's your trend, right? Market structure is the trend in which price is going. So whenever price breaks its structure, that means that it's going to change trends, right? So this is your trend right here. This is your trend, right? This is your trend. It's going higher, right? You have your higher highs right here. I mean, your higher lows, excuse me. And then you have higher lows right here, right? And it's making higher highs and then making higher lows and make higher highs, higher lows. That's your trend. So the same way it did higher highs here, I mean, higher lows, God, right? So you have your higher low right there. As soon as price hits here, right? And then it decides, we want to break the structure, right? You have a lot of sellers up here. Boom. Price is going to break its trend, break its structure. Excuse me. It's going to break its structure by breaking below that swing low. It's going to break below that higher low. When it breaks below that higher low, it is now broke its structure, meaning it's going to change trend. So now we made now we made a lower low than here. What we were looking for now is for it to make a lower high. So now it made a lower high. The next step, you guessed it, a lower low. And then you guessed it, a lower high. And then you guessed it, a lower low. And then you guessed it, a lower high. And then you guessed it, a lower low. So when price breaks its structure, that means that it broke the previous higher low and it made a new lower low, right? It made a new lower low. And then it made a new high, a new lower high. So as soon as it made this lower high, I would be like, all right, cool. Now we can set our position right here, right? It's about to break this low. Cool. Now we would set our stop loss above that higher low, above that lower high, and you would just target the first, right? The whatever previous level you would have on your time frame. This is what that would look like. So you would see price made a lower high, and you'd be like, ooh, what's next? A lower low, right? So it made its lower high. When it breaks this again, when it breaks that lower low, that higher low again, then you set your entry point. You get in, and then boom, now you set your stop loss above that previous higher low, and you just wait out price, and it could keep going down. Price can go as far down as it wants until it breaks its structure and it makes a higher low, right? Until it breaks its structure and makes a higher low, then there is no reason for you to be fearful in your trade moving the opposite direction to which you want it to go, right? So that's essentially the entire strategy, but I want to go over it one more time. You have your swing highs and your swing lows, your swing highs and your swing lows, right? You have an indication. An indication is put it over here. An indication is telling you the trend is trying to push in this direction, above or below swing highs or swing lows, right? An indication is price telling you we got power up here, right? So now, when it breaks a swing high or it breaks a swing low, right? Indications, you have to wait for the correction. Why do you need to wait for the correction? Well, I'm glad you asked. It's because corrections are not always going to go back to the previous levels that it indicated from. That's different. Corrections happens from the initial breakout to liquidate emotion, impulsive, and FOMO-induced buyers or sellers, right? So corrections are literally for market makers to collect cash from people who got in. Like, let's say this indication happened, it broke out, boom, it was right here. There would be people that would get in. There would be people that get in right here, right? And they would have their stop loss like around here or whatever. And then you have your FOMO buyers, the people who are FOMO stands for fear of missing out. Your traders that are like, oh, we ran up all this already. Let me get in now so that I can capture all the run that it's gonna have because look at all this momentum. Yeah, okay. Market makers are looking at that. So they want to liquidate, meaning collect the stop losses from these people, the impulse buyers and the FOMO buyers, and take their stop losses, because market makers make profits based off of the transaction alone. They have a commission, right? But on top of that, they need to collect capital in order to push price higher. So they need that correction to collect and then push price in the direction that they want it to go, or in the direction that it's insinuating that it will go. So corrections will collect the stop loss, because these buyers up here where their stop loss would usually be like around here. So eat them, boom, they got stopped out. And then you got the impulse buyers that bought on the indication, which is something you should never do. And then they went all the way down up to here and liquidated them as well. And then it turns around and it starts pushing past this higher high that it made, because again, it created an indication. Then the correction was what? A higher low. And then it made what? A higher high. So essentially the strategy is you wait for a breakout from a swing high or a swing low, right? You wait for price to correct and go back to that range of your swing highs or your swing lows, right? And then when it turns around, now you get in right here. Because now when you get in right here, right? Now it corrected, and then you set your entry right here. What's going on? and you set your stop loss below. If I could just, there you go. Let me just move this real quick. There you go. So you would set your stop loss below the swing, below the higher low that it made, right? You would set your stop loss below that higher low. Oops. There you go. Below that higher low, right? And then you would have your entry point when it breaks back above those swing highs. And then price will go on to make higher highs because it had the indication. It already showed you that price can get up to here. So you can fuck around and just target this, right? It could be a 1 to 2. You could just get in, boom, you have your stop loss below the higher low, and then you just target the high of the indication, and then you're good, right? I do that sometimes. Then there's other times where I know there's strength, and I just leave it, and it'll just run and run and run and run and run and run. You can have a 1 to 4. You can have a 1 to 7 sometimes in some cases, which is a gnarly day. Let me tell you, crazy days like that are, you're not there yet. But that's essentially all it is, right? I could go into all of this. I could, but you essentially got the gist of it. This won't be the only video I'll make on the topic, but for now, been here long enough. So remember, indication, correction, continuation, right? The indication is to observe. So observe the indication. Even if it goes $100 past that swing high, great. Now you know price has the capability and the strength to go past that previous swing high by $100. You could just target the high of the indication and you're solid, right? But you observed, you waited. That's why alarms are important, because you'll be the impulse buyers. You'll be the FOMO buyers if you do not have alarms. Alarm goes off, boom, it just broke your swing high. The indication has been made. Great. Now you put an alarm for the same spot. The same spot, you put an alarm and you let it go. Probably a couple dollars above it. Give yourself some wiggle room, right? You leave it. You get an alarm again. Oh, it just corrected. You see the entire correction. You're like, damn, MFR was right. Had I been in that, oh my God, I would have been creamed. Oh, would have been creamed. But I set my alarms, right? I waited for the indication to do what it does, and then I waited for the correction to do what it do. It hit my second alarm. Wow, it corrected. It made a higher low. Oh my God. What next? You put your fucking entry. You get in position and you wait for price to go either to the indication high or past that. That's it. Bada bing, bada boom. You made some money. Now go to fuck home. Right? Or go to fuck to sleep. Right? Wherever the fuck you are. But that's the whole thing. The continuation. What the continuation helps you do is realize that you need that second move to confirm that price is on a downtrend or uptrend. Remember, indications will always create a new high or new low. You shouldn't be confused on if price is making an indication or not. Is it a new high or is it a new low? If it's not either one, it's not an indication. Right? So if it didn't break any of these swing highs, or if it didn't break any of these swing lows, then it's not an indication. That's why when you go up here, right? When you go up here, you can see these are swing highs, right? Let's go back to the 1 hour. It's cleaner. So, crucial rule. Oh my God, and I almost forgot. When you mark up your charts, oh, and I have it here too, and I'm bugging. When you mark up your charts, always Always only use the 1 hour time frame or the 4 hour time frame. What are time frames? Time frames are this. Each candle here, each candle, because these are called candles. These are candlesticks, right? Each candle is a certain time, right? So it takes a certain amount of time for each candle to close and for another one to begin. I trade the 1 hour and the 4 hour time frames, and then I look for an entry on the 15-minute or the 5-minute. Meaning that if I go down to the 15 minutes, it's like imagine you're a surgeon, right? And you have a client on your table. You have the general idea of what's going on, but now you need to dive into the client. You have to open them up and you have to dive in and see what is going on. You have to get a better picture of what the inside is what's happening on the inside. So that's what it is. This is surgery. You start off. This is the 4 hour time frame. Your client is on the table. Now you have the 1 hour time frame. The client is now an incision has been made, right? You're cleaning out the blood, right? And you're seeing, okay, it's doing this, that, and the third. All right, cool, bet. Then you continue the surgery. You put a camera inside the body so you can operate with the little utensils. Now you're in the 15-minute time frame, and now you can see what is happening inside the 1 hour candles. Hear me, pay attention. I'm not going to say it again. Now that you're in the 15-minute and you're inside the 1 hour candles and you can see what's going on, now you're like, all right, cool, I got a better idea. Depending on how it's different for every person. You can either just use the 5-minute or you can either just use the 15-minute. But regardless, those are your two zoom ins, right? That you can zoom in that much. So if you were to go to the 5-minute, now you see a lot more, right? You can see some lows right here. If it breaks past this low right here, then you know that price is going to make a lower low. And if it makes a lower high and it comes back down and it breaks that level again, you can deadass just put an entry right here and just try to target these areas right here. It is simple. Simple, simple, simple. Right? These time frames allow you to do surgery on the market. You can see what is happening, right? Go back out to the 15-minute. You can see what is happening. Go back out to the 1 hour. Now you have the general idea. See how I mark up my charts? Higher high, higher low, higher high, lower low, right? Lower high, higher low, because now we made a higher low. We didn't go down here and break below these levels. So we made a higher high, and then it broke past this level, meaning that it's going to go make some higher highs. And then it made some higher lows. Lower high, higher low, higher high. It just keeps going. It's a structure. When it breaks the structure, you can target the next one down here. You can target the next lows. When it breaks structure, you target what's next, right? But as you can tell, it has an indication, full indication, correction, continuation. Well, what do you know? Indication, correction, continuation. Indication, correction. You see these little candles right here? Correction, continuation. Even here, if you want to go back into the 15-minute, indication, correction, continuation. It's not rocket science. Indication right here, indication, correction, continuation. That's all it is, literally. But you mark up your charts, you mark up your highs and lows on the 1 hour or the 4 hour. You mark up your highs and you mark up your lows on the 1 hour or the 4 hour, right? Your highs, you mark it up, broke past it, continuation after it corrected. You can't see the correction on the 4 hour, so you go down to the 1 hour. 1 hour seems like, I can't really tell that much. I'm in the 15-minute. Oh, I see that it actually corrected. It broke above. My alarm would have went off. I would have set another alarm and it would have went off immediately. I did. This is what I did. I got in here and I ran that up. It's easy. It's easy. As soon as you get it, trust me, as soon as you get it, you'll be like, ah, I see now. That'll be you. Watch. As soon as you get it, you'll be like, ah, okay. I see now. Anyways, that's it. Honestly. That's what trading that's what Top Step looks like. This is just so you guys can see. This is what Trading View looks like. Like it has a couple more things. These are other indicators that I have. If I were to just hide this, then here, this is important. So right here, key levels by Spaceman. This is an indicator, absolute must for Trading View. If you had to have, because you can only have 2 on Trading View, only 2 indicators you need. Key levels by Spaceman, and then pivots, pivot points, high, low. So these are your pivot points. So you can understand, like, okay, I don't know where my highs are. I don't know where my lows are. It'll tell you right here. This is your high. This is your low. Right? Low, low. Your high right here. You don't need to do much. And then these are your sessions. So you see here, New York Open right there. This is the alarm, by the way. This is what it looks like. See, crossing 25,468. And here, Asia high. You got your London high up here, New York high. So basically, these are the highs of that session. These are the lows of that session. Let me put that right back there. Right? Your London Open, London low, Asia Open, previous day, the daily open, now what it opened on. This is when it opened right here for the day. It started here. All right? Previous week high. So it basically has the highs and lows of each session and the open. So like that, you know what session am I in. It'll literally say it. It'll either, like, you won't see Asia or London. I mean, you won't see London or New York, excuse me, until Asia session is done. But you'll see Asia, and it'll be pushing Asia highs up and pushing Asia lows down, or whatever, wherever it goes. But these levels, these are your key levels. Key levels are absolutely important because you can target them alone. Like, this is a cluster. I call it clusters. When all of them are just in one spot, there's a higher chance that price is going to go back to these levels right here, which is why I have an alarm right there. And then this is another cluster. Price is going to come and touch this right here, right? Clusters for key levels are important because there's a density of activity there, right? So that being said, this is Trading View. You know, you have your time frames up here, your indicators here. You have your alerts right there. You can add one if you want, but I'm not going to. You can also add it right here. See, add alert. I'm not going to. And then this is what your watch list needs to look like, right? These is all that you need to type in. So screenshot this. This is your heart. This is the market's heartbeat right here. You have your Dow Jones Industrial Average, which is the 30 industrial stocks in America. You have your NASDAQ 100, which is the 100 best stocks in America. And then you have your S&P 500, which is the 500 best companies in America. Then you have your VIX, the volatility index, must have. You have your 10-year treasury, right? This is what most auto loans and home loans are tied to, right? So the percent now is 4.0%. Then you have your dollar index, right? Your US dollar index. When this goes up, normally this goes down. So everything here, when this is green, usually this is red. And when this is green, usually these are red. The way they were, these only turned around because of this right here. But these were all red while this was green. That's why this is your heartbeat. This is your heart monitor. This is when you go into the doctor room and you see that, that's this right here. You can gauge the market's sentiment with this watch list here alone, right? I have my crypto, so Bitcoin, XRP, and then I have the stocks that I like to look at for my options trades here. So Nvidia, Microsoft, Apple, Amazon, Google, Meta, right? all these other companies here, McDonald's, JP Morgan, Roblox, Nissan, Home Depot, CrowdStrike, Palantir, Netflix, Coca-Cola, Tesla, Google, Meta, Amazon, you know. And then these are the ETFs, like the NASDAQ ETF and the S&P 500 ETF. But basically, this is what you need. When you download TradingView, just type in, like, you'll see this button on your phone or on the, like, if you have it on your laptop, you'll see it like this. But you press here, and then you just type in these. So YM1, you would type it YM1, and it'll pop up right here. And you just bloop, add it, right? You do NQ, and it'll pop up right here. You add it, right? See how it says the little thing right there? Add to watch list. You add it. So that being said, I think I'm gonna wrap it up right there. It's been an hour and 30 minutes. It's a lot of material. Wow. But for moving forward, you gotta just jump. You gotta take that leap. You gotta trust yourself. Honest to God, if you don't, you're not gonna go anywhere. If you don't take risks, you'll end up working for someone who did. You know? The idea is merely just to be whatever income you have coming in. You're not gonna be a millionaire tomorrow, right? You can get there, trust me. Entirely possible with this. 1,000%. Get 5 accounts. What? Get 5 accounts. This is the play. Let me break it down for you. 5 minutes, real quick. You have 5 accounts, each $50K. Costs you $50 for each of them. $150 activation fee for all of them, right? Every time you make a trade, let's say I have $600. Let's keep this math simple. Let's say I have $500, right? I make $500 in a trade. Because I have 5 accounts, I'm trading those 5 accounts at the same time. In actuality, I have $2,500 that I would have made that day for only $500 gain. So I traded, made $500 on each account. That day I made $2,500 because each account made $500. So at the end of the month, if I make $10K for the month on each account, I just made 50 racks. I made 50 racks. Thank the Lord. And you go on to take your payout. Right? If you make 50 racks and you only want to take out half, that's 25,000. Take out 5,000 from each account. Boom. Like, what? But that's besides the point. This is a business. You need to learn how to operate the business the way it needs to be operated. You need to do what is required in order to get the results that you want. Doing what is required is very, very difficult, which is why I have the school community. I've walked the road. I have the scars. I put the time in. I've studied. I got my books. I've done it all. Like, I'm helping y'all so that y'all don't have to pass all the trials and tribulations that I did. So join the community. It's free. You don't need to do much besides sit, listen, take notes, and apply what you learn. I'm going to be posting on the account the markups that I have. Like, okay, look at this. This is the alarm that I set for here. This is the chart. Da-da-da-da-da. And then boom, when it happens, it happens. When an indication is made, I'll know. When the correction happens, I'll know. And then I'll be ready to make the entry, and I'll be ready to get into position when it's making the continuation. So you can do it all yourself, but good luck to you, for real, because it's not easy. Managing yourself, easier said than done. But other than that, I'm gonna end the live with this. This is MFR. I hope this helps somebody, to be honest, because this is everything I'm doing so far. And it's working for me. So, peace to y'all. MFR is out. It's 8:40. I'm going to go watch a movie. Made my money today. I'll wait for Monday. And then we'll start it all back up again.